to see central banks and official institutions. But perhaps the biggest thing that we've got on at the moment in my department and I think the Australian payment system is the introduction of faster payments. And I know that's a hot topic in Canada, both from listening to the presentations that we've heard over the past couple of days, and also Payments Canada, in consultation with some other stakeholders, has released a very good discussion paper on the subject. So I've no doubt that you guys are thinking very hard about what should happen to renovate the Canadian payments landscape. So before I go too much further, I should note that the views that I'll express today are my own, and they don't necessarily reflect the views of MPP Australia, its shareholders and directors, of which I'm one. So to add value today for you guys, what I'm proposing to do is to talk about strategy, governance, timetable, how we got to kick off the project. I want to talk a little bit about how our MPP, or New Payments Platform, as we're calling it, will work. That's our word for faster payments, just so you know. Where does real-time gross settlement fit into this proposal? What we think you can do with the New Payments Platform when it's going to work or commence operation. And then we're going to go back up again to the strategic level after that deep dive and talk a little bit about the lessons that we think we've learnt and what's worked well for us. So the first point I think it's useful to make, and I've heard some other speakers make it as well, is that the process that we've kicked off was really very much grounded in customer wishes. So it's fair to say in Australia, like many other jurisdictions, we'd had a long period of stability in our core payments infrastructure. The last big innovation that we did was in 1998 with the introduction of RTGS. So that was really a big step forward, got rid of systemic risk to a large extent, and payments could flow really quickly amongst a wider number of participants. But nevertheless, it only worked during business hours. It didn't work on the weekend. Real-time funds availability was not even thought of, probably, in some senses at that time. There was a lot of innovation and has been a lot of innovation at the banker customer level, like there has been in Canada. But in the middle, it was very stable. And we were becoming very aware as the central bank with responsibility for both the efficiency and the stability of the payment system, that wasn't going to wash in the medium term. And we also, as one of our functions, provide banking services to the Australian government. And some of the government agencies were making quite clear that they were getting frustrated with the quality of, or the extent of payments services that were available. And they used examples like, well, if we want to send emergency payments out following a natural disaster, and it's inconvenient, the natural disaster occurs on a weekend, what have we got? Well, we've got cash, but can't necessarily predict where the natural disaster will fall, so that can be a problem. Or you can use store value cards, but you have the same problem as cash in that, you know, you've got to know where it is and get them there. So yeah, there was a building frustration amongst many customers. So what we did was issue a consultation paper in 2010, and that was done by our policy colleagues. We had a lot of feedback, it's fair to say, from both payments providers and from users in the payment system. We then looked at all of those comments and drew some conclusions in June 2012. And the conclusions were that we wanted real-time funds availability, we needed a 24/7 operation, we needed more remittance information to be able to go with the payments message, and we wanted easier addressing. And by that I mean, if I want to send someone a payment, it would be nice if I didn't need to know what their account number was, because some of those in Australia are up to 9 digits. My memory seems only goes to 6 sort of thing. And also you need to know the bank and branch reference number. So that can be inconvenient for some people. And so what we would like to have is I can send you a payment by just knowing your mobile phone number that's linked to your transaction account, or perhaps an email address that's linked to a transaction account. So these requirements form the essential business requirements that we distilled from all the various commentary that we got. The industry then had the challenge of responding to that, and they did that very well. They formed the Real-Time Payments Committee, and went through a number of iterations, and a finalised proposal was put to the Reserve Bank's Payment System Board, which is our official regulator in the payment system. And that was accepted shortly after the February submission of the proposal. So this slide sort of gives you the potted high-level summary of where we got to then, following that submission and acceptance of the industry's proposal. So this shows the summarised features at the very high level of our NPP infrastructure. So the first one's really quite important, and that is that there is a separation between the business proposition space and the utility clearing space. So the clearing functionality, just the sheer capability the infrastructure goes with it, is a utility. And the people that run that utility are not responsible for running the business. So they're not also a scheme. They're not trying to explain to customers how to use a particular business use case for this. That's in a different layer, and we'll go into a bit more of that later. The new infrastructure will be ISO 20022 compliant, and it will be structured in a way that carries a lot more data, and it'll be about 280 characters of individual remittance data as possible in the message, as well as links to a database elsewhere that will give you a message, or you can attach a PDF document, for example, in it. We will have real-time gross settlement, and associated with that we have real-time funds availability. And I say funds availability, but I don't necessarily mean real-time posting to accounts. That's a different thing, and that's up to individuals, financial institutions. We have an outsourced infrastructure provider that will build and establish the basic infrastructure. So that's the infrastructure that clears the payments messages. And that's SWIFT in our case. We will use an Australian-based network rather than SWIFT's international network. And the addressing service, so that database that links up people's email addresses or phone numbers with a designated transaction account, that will be part of the utility. It's not a commercial proposition. So in terms of project governance, it was originally managed by a steering committee, and that commenced in mid-2013, and at that point the Reserve Bank joined the steering committee. Both myself and my colleague Tony Richards, who's the head of Payments Policy Department, were members of that committee. And that proceeded along for a while until in December 2014, the New Payments Platform Australia Limited was established, and obviously it has a board. I'm the RBA's director on that board, and Tony Richards is also an observer on the board. So the Reserve Bank continues to maintain its involvement and contribution there. So it also has an independent chairman. The 4 major banks in Australia are on the board, as well as 4 other FI representatives. When we go live, my board seat will become an observer seat, and we will put another independent director in there. As you would expect in a program of the size and scope of a faster payments initiative, there is a lot of working groups that sit underneath the board. The most important is the Program Delivery Authority, and that contains the program directors for all of the bank's individual programs. They're very senior people, and we're relying on that group to, in effect, bring that program, our industry program, to fruition on budget and on time. So they play a very key role. Underneath that working group are many committees, and we had a business requirements committee, we have a technical design authority, we have a functional working group, we have a testing working group, which is developing our test standards, which is very busy at the moment, regulation working group, and on it goes. But there's a whole range of different working groups which have very full participation from industry members and the Reserve Bank, who are working away at the things that we need to get done to make this a live proposition. And KPMG operates the project office. We're not self-doing that. It was one of the very clear decisions early on in the piece that if we're going to do it, to quote one of my commercial bank colleagues, we might as well do it properly. So we got a dedicated project office. This is a stylised version, high-level summary of the way our program schedule looks. So the green at the top is the NPP project timeline. The reddy brown colour at the bottom is the Reserve Bank's associated timeline. So as you can see, for the industry and ourselves as well, 2013 was all about building our business requirements. 2014 was very much devoted to an RFP and then an RFT to pick the vendor that would build and operate our basic infrastructure for NPP Australia. At the end of 2014, that process was completed and we had picked a vendor. And at that point, we then put the commercial proposition to all of the NPP participants. So the deal was, here's what it's going to cost to build. This is what it will cost to fund the company for the rest of the build stage and 2 years into operation. You need to commit to this now so that we can sign with a vendor. And by implication, you also need to sign off on the associated work internally to bring this whole project to fruition. That was obviously a very important time in the project. There was a lot of internal work that went on to make sure that the business case was fully established. It might seem obvious to us all now, faster payments seems to have a momentum of its own around the world, but don't underestimate the amount of discussions and internal consensus building that needs to go on amongst all of the various stakeholders within your institutions to get this proposal to happen. Because I think if you look at the build work, it's probably 40% in the middle and 60% internally. So it's sort of like the middle is the tip of the iceberg. And why do I say that? Well, because if you have a very fast payments clearer in the middle, that's all fine, but if your systems are still working on batch-based and overnight updates and all the rest of it, and your fraud systems are still working at a much slower pace, then it's very difficult to make funds availability happen. And obviously your customer interface points have got to get updated as well, because you've got to show this enhanced information to your customers in some way, shape or form, and you've got to allow them to initiate a new payments platform message as well. So it's a big job. And I heard, I think, one of the other speakers comment earlier that this is really a chief executive level buy-in and decision point, and I think that's right ultimately. And the projects for the big banks particularly, and well, in fact all of them I think, had to go to the board level to get endorsed. The commitment of resources, etc., was that material. So following 2014, we then got, in 2015, really got our heads under the bonnet, as they say, and really fleshed out the technical requirements of the system with our vendor, being Swift. The Reserve Bank did the same with its own fast settlement service, and it was a very busy period. That's now been completed, and we're now in the build and test phase. And it's really exciting to be able to say that all of the FI participants now are putting in the first drop of Swift functionality in their ecosystems, and we also have a working prototype of our fast settlement service, and at the moment we're doing integration testing between those two systems. So it won't be very long before we have a working BI, basic infrastructure. So in terms of what happens next, we'll finish off that build and test phase, and we'll move to industry testing in 2017. And the plan is that we will go live with this in Q4 2017. So that's all fine, but what does it all mean? So the first slide I've got here in terms of what does it all mean is a conceptual one, and it just shows the layers of what we're building. The first layer is that overlay space. That's the big ideas type space, or some computer people might call it the sandbox. But that's where you're supposed to work out what you can use NPP for. The bit in the middle is what we call the basic infrastructure, and that's that utility clearing service that's being operated by Swift under a contract to NPP Australia. The bottom layer is the RBA, and that's a new RTGS settlement service that we're building to complement the very fast clearing capability that the industry is putting in place. as I said, the separation between the overlay space and the basic infrastructure is a very important one. If you're a scheme running a clearing infrastructure and someone else comes along with a really great idea, you're sort of a bit conflicted if you think that the great idea might actually eat away at your actual business proposition yourself, even if that's part of your job. So separating out that decision points between running the clearing and someone else sorting out the business propositions is not a bad one, and I think it's one of the really great innovations that the Australian industry came up with. So this is a little bit more, I guess, detailed version of how our system will work. So you've got the Swift Australia network in the middle. On each side there you've got a payer participant and a payee participant. The gateway there is what we call a payments access gateway, or a PAG, and that's where the Swift software sits. And then immediately behind the PAG is a payer bank's or a receiver bank's systems that will respond to incoming and outgoing clearing messages coming through the Swift system. Down the bottom is the RBA, and we also will have a PAG. It's a bit different to a clearing participant's PAG because we're all about settlement. But we will have one, and we will have the FSS application behind it. So the clearing message goes across the middle. The receiving bank will look at that and will confirm whether or not that's a valid account and a valid payment message. If the answer is yes, the settlement request will come down to the RBA and we will send back a settlement confirmation. That's the basic orchestration of how it works. So, real-time gross settlement. Some people have it in their faster payment system and some people don't. For us, we thought it was simple. Computing power is really, as we've heard, Moore's law and all the rest of it, is able to do this. Given that we're trying to set up an infrastructure that is very flexible, we're not trying to pick a particular or solve for a particular problem, we're trying to set up some infrastructure that will solve for many problems. So RTGS is very flexible on that front. We are able to use a single pool of liquidity, and I'll go into that a little bit further in a minute. There is no complex failure to settle rules, there's no collateralization to manage. So it's a fairly clean solution in that respect. This is a version of the diagram I just showed you with the basic orchestration, but it just brings apart a little bit conceptually the settlement service there, and the key points to note are that our fast settlement service, or FSS, will just be another service of RITs. There will be one ES account, exchange settlement account, so you'll just have money allocated to your core RITs transactions, which are usually high value and settlements for depository or debt securities trades, and you'll have an allocation to FSS. The sum of those two balances will be what's in your exchange settlement account at the Reserve Bank for each FI. Like our RTGS system at the moment, settlements across the FSS will be final and irrevocable in central bank money. FSS will be able to operate when RITS is closed. It will be very fast, highly resilient, like the main clearing infrastructure, and will operate 24/7. One other point to note is in a contingency frame that clearing can continue if FSS has a contingency. So settlement requests will just be queued in the sending the payer bank's PAG. This is an image that sort of shows you just a stylized version of how the infrastructure will fit together for our FSS service. Both RITs and the FSS will use a common interface, but they will have different infrastructure stacks beyond that. So they'll each have their own database. FSS and RITs application are separate and distinct, and the Swift infrastructure that sits in front of them is also distinct. As you can see there, that we're sizing our FSS settlement system to operate at 1,000 TPS from go live, and we intend to respond to settlement requests really quickly, less than 1 second for 95% of settlement requests and less than 1.5 seconds for 99.95. This is just an illustration of how banks will allocate liquidity in our fast settlement service. So at the computer screen at the top, the total exchange settlement account balance is 100 million, And in this model, the RITS allocation is 80 million and the FSS allocation is 20 million. Now, for your FSS, you can set a reset point where you want that amount of exchange settlement funds to be, and in this case, this FI is picked 30 million, and you have an upper trigger point and a lower trigger point. If your balance goes above your upper trigger point, money will be pushed back to your RITS balance. If it goes below your lower trigger point, the system will grab some money from your RITS allocation and put it across to your FSS allocation. So in this case, if the balance is 20 million, it's okay. It's neither below or above the trigger point. So the system will be happy with that. So liquidity over weekends. Once RITS is closed on a Friday, the banks in the FSS allocation will have access to their full ES account balances. So when RITS opens again, the system will push across back to RITS everything that is in excess of their midpoint that they've nominated for their FSS balances. It's going to be very important that the banks get to monitor their liquidity a little bit more closely than they have in the past and look to forecast their customer needs. So resilience. This on the left-hand side is participants. The standard arrangement will be 2 sites. They will have to have a PAG cluster at both sites. Their payment gateways, which respond to incoming messages, will have to be there at both sites, as well as your back office system. The way to think about the basic infrastructure is sort of a decentralized hub. It almost looks like, in a sense, a blockchain implementation where you've got the software at a number of different players, in this case all of them, and the associated databases are there too. But you have one pipe into this virtual hub. So you're not having, where you have a standard sort of a bilateral exchange where everybody has got a communications link with everybody else in the club. That doesn't happen here. You've got one pipe into the network. You have one SWIFT application on your system. The RBA similarly will have 2 sites and 2 sets of installations at each site. This diagram shows our FSS installation in a little bit more detail. The green is active-active, the red is hot standby. So as you can see, we have 2 sites, 3 different diverse path high-speed links between each site. We have load balancing in our SWIFT components, so they're the PAGs there. Our RITS user interface is active-active. The only thing that isn't is the FSS application and the core RITS application. That will work from one site or the other. In this case, we're showing it as being active in head office. But we do have the ability to flick sites if it stops operating. So if the FSS application stops operating at head office, there's a 3rd site. You'll see there a little blue on the right, and that has what we call a quorum server in it, which is polling and monitoring that the active FSS and RITS application is working. If the FSS application is not working, then it will flick to the other site and take over in seconds. So use cases. We have the initial convenience service is the first use case, and it has a special status because this is an important component to meet the industry's commitment to the Payment System Board. And what it will provide is real-time funds availability and richer data. It's basically a rule book, so that all of the participants are signing up to this and committing that when they get one of these payment messages, that they will make the funds available to the receiving customer within seconds, and that any associated data will be given to the customer by at least one channel. So this is a slightly more detailed version of the payments orchestration. So someone's come in perhaps with their mobile and sent a payment request. That will go down, and in this case they're using the addressing service. So they might have said, I want to initiate a payment to this mobile phone number. The bank takes the request. It will have to go down and look up what that mobile phone number is attached to in terms of the bank reference number and the account number of the payee. That will come up to the payer bank's systems. The sending customer won't see that. They'll just know the mobile phone number, but they will get a short name for who they're sending it to. So in my case, it might be Greg J. So at least if they've put in a mobile phone number and made a typo and it comes back as Jane Mary, they'll know, well, that doesn't sound right, so they might redo that. But assuming that's right, the payment instruction goes across like it has, the settlement request then comes down, confirmation happens, and the customer at the other end gets told. This is, as I said, this solution is meant to be very flexible, and that was a very simple use case. This is a more complex one where you have an overlay service provider up here, and the case I'm using is a service provider that's decided to link in the payment of money to car dealers on the weekend. So at the moment, all you can do is give them a check, or if you have a big enough credit limit on your credit card, you might get that out and pay for your Porsche with that. But most of us don't have that big a credit card limit, so we're sort of stuck with a check or some other form of ACH payment, and then we get the keys on the Monday. So the concept of this overlay is that it's a service provider. It's not necessarily a bank at all, but they've managed to get convince the banks this is a good idea. And they will enable the person who wants to buy the car on the left to put in a payment request via the SWIFT network to their bank. Their bank says, has that person got enough money? If they do, then it goes across to the car dealer's bank on the right. And that person says, yes, I've got the account. Then the payer's bank sends down the settlement request to us. That then gets confirmed. But the new bit about this is that there's a non-value payment now going through this clearing infrastructure, which tells the overlay service provider that the payment has been made. And the nice thing about that is that they then tell each of those parties that are sitting across the desk, for example, and obviously the seller will give the keys to the buyer, but that overlay service provider might be smart enough also to electronically move the official title of that car in say your provincial government's registry office into that person's name. There's no paperwork to fill out. That's sort of, for those of you who are sort of interested in or know about wholesale markets, that's sort of like a DVP sort of payment in many respects. So you could equally do that for a house sale or anything else where you want to coordinate the movement of ownership of something, an asset, with a payment. So the last thing that I thought it might be useful for you guys to think about is what's worked well for us. And I've put down here a list of things that can cause some discussion and debate. As you go along your faster payments journey, there will be certain things where the industry will have a good discussion about them. The scope of the proposed services is one of them. Governance rights and responsibilities, vendor selection, functionality and key design decisions, project funding and business cases, the test scope and how to go about monitoring it, contingency management. All of those things will cause a good deal of discussion, I expect. And so I think there are certain things that have worked really well for us. Some of them weren't immediately obvious to me at the time, but when I look back, they've worked well. I think the first thing is to establish a clear and aligned vision between the industry itself and between the industry and the regulators that are relevant. You've really got to be, if you're not on the same page about the core objectives of your proposal, it won't stop the discussion happening, it'll just happen later. So it's really important to get that buy-in, and there was quite a few times through our project where we had to say, well, look, that proposal is very interesting, but it does not align with the original industry proposal that was accepted by the Payment System Board. The other thing I think that's very important is to establish a clear and formal decision-making process. In many industry discussions, it works well just to have a chat and you sort of sort it out, but this one really requires a very formal and structured decision-making process. You should actively encourage collaboration between players as well. This is also a very important one, is to ensure senior executive buy-in. It was a very conscious decision at the board, the MPP board, and before that the steering committee, that we had very senior people. We had executive general managers, chief executives in some instances for smaller FIs. There were people who could commit their organisation. And that's proved to be very important at each stage through the process, because sometimes you need to say, well, we need more resources, or we need to cut through this discussion. And you need people that can really influence their organisation all the way through the process. And the last thing I think that's proved very beneficial to us is to don't be afraid to commit sufficient resources and professional staff to do it properly. If you try and do it a little bit on the cheap, or have people that are very distracted with other things doing some of the core stuff, it can become very problematic, because it is a very big undertaking, but a very rewarding one. So I might leave it at that in terms of the opening opening presentation, and just see if anyone's got any questions. Yeah. RITS is our RTGS system, so it stands for the Reserve Bank Information and Transfer System. So it's the equivalent in many respects of your LVTS, but in our case, the Reserve Bank owns and operates it.
Thanks, Greg. That was great. Every time I go through that, I learn a little bit more, and then I have more questions. But access. So can you just talk a little bit about the access idea, and where you landed, how you landed?
It's a great question. To be a participant in the basic infrastructure, you need to be a regulated entity. We call it an authorised deposit-taking institution, and our prudential regulator is APRA. And you need to be able to meet the operational requirements and technical requirements of the clearing infrastructure. So that's about all you need. You can participate directly if you're one of these ADIs. You can choose to only clear. In principle, you can choose to only settle if you want to directly, or you can be an indirect clearer and come through another service provider. If you're a smaller institution, you want to directly clear and settle, but you really don't want to manage your own infrastructure, in principle, you can also go through a bureau service provider that's directly connected to the infrastructure.
Thanks. Great presentation. So just wonder if you could give us a little more insight into I'm sure which was likely a discussion of the settlement approach, real time versus deferred net settlement. And you mentioned that certainly technology is in the hurdles these days. So is it more strategic?
I think it was mostly about keeping it simple and keeping it flexible. If we knew, one of the premises which you might have been assuming there is this is purely a retail payment system. It's actually not. There is no value limit on these payments. So the infrastructure is supposed to be incredibly flexible. The industry can, say during a contingency, impose a payment limit on outgoing payments. It can throttle. There's technical specification there where it can throttle the speed of payments that are being submitted to the clearing infrastructure. But the idea is that this is a bit of really new payments infrastructure that is agnostic as to the business propositions that are supposed to go through it. And we're trying to make this relevant for 10 years, 20 years out. And so we think we can provide the RTGS service. And in fact, as I think I said, we have a working FSS prototype that's settling transactions really quickly. So it's viable. We can do it. The RBA has quite a large operational wing, so it's not it's a large undertaking, but it's not beyond our competence. So we think it works, and it's a very simple thing to manage as well, in terms of the associated business rules that go with it.
Another question. So you mentioned bill pay.
Bill pay.
And I think the other use case is person to person. So do you have a sense of the potential for migration of other payments from legacy infrastructure? Like, I think in England there's been significant sort of migration from their old batch and credit transfer system.
Yeah. Yeah, look, there's a wide range of use cases. We talked only about a couple of them, really. I mean, you can request to pay will be in it. There will be payments with that can link to a large amount of information. So if you're a superannuation or retirement fund provider, oftentimes you'll get a payment, but it's very difficult to work out actually who is allocated to what part of that payment in terms of your customers. So you can send a payment under this thing, and the associated reference material for how do you allocate that incoming payment can be either linked in to the payment or put out more in some other way. But so I think it will be flexible, and the bill pay I think is one that might come in, but in terms of migration, I think cash will be one. The industry and we are certainly hoping checks will be another. Direct entry or ACH, there will be some payments that go migrate across there, and potentially some of our RTGS payments, which had nowhere else to go, will migrate across as well. So we're quite agnostic about that. We don't mind at all. We just sort of put the service out there and see where the users and the payments providers would like to go with it.
Did you look at the beginning of the process of this project, did you consider upgrading or enhancing existing systems? And if so, what was the process to come and arrive at the decision?
We did, but not very long in our case because, say for RITS, it's built on a different technology and it wasn't going to operate fast enough. It just wasn't. So we knew we needed new infrastructure there. If you look at what we had in play to build from, direct entry was very old. It didn't have the right message format. It was batch-based. There was no central switch or a virtual switch like we're building now. It just wasn't sort of up to speed at all. So we really didn't have too much. I mean, you could have in principle perhaps leveraged off a central switch that was facilitating, say, card-based payments, but we hadn't quite got to a fully centralized version of that. And even then, I think the industry would take the view that that's not the one. They want something completely new. Yes. Mm-hmm. If it's not running well, yeah. That's a problem, or not a problem, but a possibility that we can have today. So RITS is the central settlement system, and we have satellite feeder systems all around it. There's a high-value cash transfer system. There's a depository called Austraclear, which is settling high-value debt security settlements. There's a whole lot of other settlement systems. So RITS can have a contingency, or one of those feeder systems can have a contingency. But if it's our problem, if it's a RITS problem, we manage the contingency and we have pre-planned arrangements in place that those other feeder systems know what to do in that event. So the policy would be no different in the NPP world. If FSS has a problem, then we will manage the contingency. I always think it's a really good policy that if you run the system, you're in charge of running the contingency that's associated with it. There's no point having someone else out there trying to tell you what to do. It's your responsibility. If NPP itself has a problem, then NPP staff will be responsible for running with that in consultation with us as the central bank. So the responsibilities are divided out in that way. Yep. Yeah, the system is designed so that if FSS is not around, the settlement request will queue up in the payer bank's PAGs. The clearing can still continue. Then in a contingency situation, we can make the decision whether or not we post those incoming clearing requests, which are all valid, they just haven't had the settlement yet. You can post those on clearing. So that's a decision that the industry can make. And you might want to, and they have the capability of, say, imposing a value limit on that. So they could hold the really big value ones and just continue to post the small ones. And then once FSS comes back online, the PAGs gracefully then resubmit the settlement requests, they come back and we catch up in that way. Yeah, that's in the contingency procedures. Yeah.
I would like to talk about the collaboration as a key lesson of the adoption of so I think that it's more than collaboration, but also it's more competition as well, the sense of that. So from your perspective and your experience, what kind of what examples of those contention points between the players that actually derives from this modernization effort, and how, as someone who's objective, you play the role to facilitate that conversation?
Yeah. You're right. I mean, there's always that innate sort of tension, if you like, between we're all competitors, but here we are trying to cooperate and build a new infrastructure. One of the there's two really important things I think that have really helped calm that tension, maybe three. The first is at the very beginning of the official process, we had what we called a collaboration event. And sort of being an economist and a banker, I thought, oh, this is going to be far too touchy-feely for me. I thought, I think I'll have to leave the room. But it was really incredibly powerful in that the industry, it was put to them, you know, you can either bring your commercial self-interest here, or you can bring, for the good of the country here, bring your best game, be really productive. This is what we're trying to build. And so we actually drew out of the industry those principles. They developed them. That got approved at the end of the collaboration event. And on a couple of occasions, we've had to say that does not comply with that, right? So that's not what we're doing. The second thing I think that's helped a lot is that this separation between the commercial, the big idea space and the overlay space, and we're just building an infrastructure that's agnostic as to what those business propositions are. So they can go away and have lots of discussions about what they're going to do with this, but it does not have to take place in the middle. Those discussions don't have to take place in the middle. They can be separate teams that are thinking up the big ideas. The third thing is that I think we had everybody in the room. I'm a great believer in, if you really want to get major uplift in payment system capability, the words I use is you need the whole team on the field. And that means the commercial banks and the RBA. And we've put our full team on the field in the sense that we've got our banking people, my payment settlements people, and the policy people. So we've devoted our full payments capability on the field, and so the commercial banks have done the same. So I think that that mix of perspectives really takes the edge off, you know, just coming to the game with a very much a self-interested commercial perspective. Yeah. Over the weekend, no, we will happily provide settlement services, and there is a lot of liquidity. So I mentioned that on the weekends, your full exchange settlement account balances will be available to you on the weekend, and that's more than just your notional overnight balances. There's sort of a running transactions balance, if you like, in your ES account, but underneath that, there's a whole lot of precautionary balances at which we pay the full target cash rate. So if on your transaction balances, we pay our target cash rate less 25 basis points. So we have a standard corridor arrangement for monetary policy. But there's a lot of balances where we just say the cost to you of keeping in there is probably the cash rate, and we will pay you the cash rate back. And they're all there ready to go to meet unexpected or large liquidity requirements. We did have a very careful think with the industry, and it was a full consultation process. Should we, if you get into real trouble, because you would have to be in real trouble to use up all of these precautionary balances, should we be able to give you more liquidity? And we had a good consultation with the industry and with our prudential regulators. And the conclusion we came up with was, well, I think if you run out of that much liquidity, you could just do with some time out. And it'd be nice to say it's a system configuration problem rather than we're pulling the plug on you, right? Because it gives the regulator, if the institution has got into that much trouble, the regulator needs to be working up a plan on the weekend and then announcing it on Monday. And you don't want the balance sheet of that financial institution sort of bleeding to death over the weekend, which it could do if you keep feeding them, liquidity. That could happen. Sorry, one more. Yeah.
Would you be able to describe how this real-time payment flow banks engage their AML project?
Yeah. AML, I think, is largely at you know your customer and understand their business. Make sure you've validated the signatories and all of that. So that happens on the onboarding, and then you get periodic reviews. The fraud one they're working on very, very much at the moment, and fraud systems will have to be enhanced to be able to look at the payments that are coming through, and like they do with cards at the moment. So they need to be fast with that, and they need to be fast with this. So they are being enhanced. If you do suspect a payment, the normal orchestration time requirements are suspended. So normally you've got to do this really quickly. But if you have reason to believe one payment is suspicious, you can take that offline and say, I'm going to have a look at that. But you don't have to respond. He would see a pause if the bank, like we would with a card payment, if he pulled out his card and wanted to buy the Porsche and it looked like this guy's dodgy or it was a stolen card, hopefully the bank would stop it. Equally, if there's something wrong with that in some way, then there would be a pause. But hopefully that's a very exceptional circumstance. Got time for maybe one more question.
I just thought I'd ask about, what are the key success factors at launch? What is the group looking for?
Yeah.
Certain market share, and then in terms of performance, what thoughts do you have about enhancing the performance over time? Are your members looking at all the logs and all the transactions?
Sure. Yeah. I think at Go Live, the key, what would be a great outcome at Go Live is different from, say, a year in to 5 years in. At Go Live, I think what we want to have is a very stable system. We want to have a very clear exposition of what it can do to customers. So the banks need to really work hard on that over the next 18 months or so to make sure that the message is very consistent about what this new service will do, what the customers can do with it. So we're applying the sort of keep it simple approach, and then it will gradually ramp up. So then once we get that happening, we get a lot of addressing registrations, we hope. And we're looking for a gradual build-up. We don't necessarily want a flood of payments through on day one. We just want a gradual build-up, and then once you get a year out, 2 years out, then we would like to see the volumes really starting to come through as the institutions start to to move their pipes across to the MPP. In the medium term, what we really want as success is a lot of different business propositions that are using it. That's the ultimate test. And to do that, of course, we will upgrade our infrastructure periodically as well.
Great.
Probably haven't got time.
Excellent presentation and very engaging Q&A, and thank you all for your participation. You're
Thank you.
welcome.
Thank you.